And you know what that sound is? That means we're live here on Tackle Trading's halftime report. Coach Tim, Coach Cody, and we're here getting ready to break down the markets. Actually, the market tried to break down below support here today, Cody. It has so far failed. Come back up just a little bit. How you doing this morning, young man?
I'm doing fantastic. Or wait, how's Matt say it? I'm doing absolutely fantastic.
Absolutely fantastic. I like it.
That's his go-to.
On Monday, we like to do a full preparation of the week, including the economic calendar and the sectors and the heat maps and the earnings reports. We got a lot to do. Go ahead and bring your screen up when you're ready. And let's start with the charts. I came in this morning overnight, and all the news was how the market was muted. And at the opening bell, about when the futures market opened up, market started to sell off a little bit here, opened up down, but now we're coming back up. Let's get a read on the S&P 500. Support 2,600. We are now testing below that. We're at 2,588. So by definition, a breakdown. In fact, This is a bear retracement rally. Looks like we're now selling as the halftime report starts. Give me a technical read here, Cody.
Technical read is that, it broke down, and then we're seeing this on the 15-minute chart, a double top here up against the 50 MA coming back down. So, that is a bearish retracement on the breakdown for the day. Was a doji just when we were doing the prep, and it's already sort of kind of come down off of that.
Yeah. When we were doing our scouting report meeting on Friday, you and me and Coach Gino and Coach Noah and Coach Mark and whatnot, we're all in there breaking down the markets, and so many more of the bearish setups just had a clearer path, right? They just had breakdown, potential and whatnot. Market is breaking down here this morning. We're currently down 0.7%, which is interesting, but not a high volatility day. Very, very close to a doji as is. As we've been saying now for a long time, it's not how the market opens, it is how the market closes. So it's going to be an interesting one as we move through the day here. I was checking the news this morning. There were quite a few companies on the S&P that were in the news. Let's take a look at Goldman Sachs, if you would. Bring up GS.
Oh, Goldman. What'd they do now?
Well, according to the diplomats in Malaysia, is they robbed them of about $1 billion out of their developmental fund, is what they're saying, and they're accusing Goldman Sachs of. Not exactly a good headline. In fact, Malaysia came out and said, and I can't remember if it was the prime minister or some minister of some department or whatnot. Basically, they are accusing Goldman of defrauding that country of over $1 billion. Real serious accusations. Obviously, it's a very bearish stock here.
Goldman frauding someone? No, I don't believe it.
I mean, talk about a day. Talk about a story where we need Matt.
Seriously, Matt would be going nuts over this.
I mean, this would be right in Matt's wheelhouse, obviously. This is something that Goldman is par for the course for many, many years. There's no doubt about it. It's down here very, very bearish. I'm looking at the financial sector, and across the board, you've got some weakness in that area, down 1.4%. We had this one on the reports a few different times. I remember early November and mid to late November as well when it was breaking down.
See this right there, that little retracement. Yeah,
probably at a profit-taking point now. We're
definitely profit-taking.
Close. Yeah, I would agree with that. You are pay range down. In fact, if you'll identify those boxes, draw me 2 boxes for a pay range on this.
I can do that.
So from pivot to pivot.
Box indicator. So
coming down. So start on the top of that pivot.
Oops, sorry about that.
Yeah.
Let's remove this drawing. We got one there, and we got one there.
Mm-hmm. Yeah, we're close to a pay range expectation here, which would be a profit-taking point if you were trading Goldman Sachs throughout the last couple of weeks. We're about right there. And welcome out, halftime crew. We're breaking down the market, starting with the S&P. Go back to the ES contract, if you would, Cody. And I've been saying this for a long time, is this 2,600 level is very, very significant. Bring it back to a weekly chart, if you would.
All right, let's see what we got here on the weekly.
Yeah.
You definitely see that 2,600 where it bounced off of that. This 50-day moving average on the weekly, it kept holding above that. Now it's been fighting to not peel away from it, really.
Mm-hmm. I think briefing.com had the line of the day. Trade uncertainty, political uncertainty, growth uncertainty, and monetary policy uncertainty continue to provide a rationale to reduce risk exposure. Now, if you don't,
it's a fancy way of saying protect yourself and trade smart.
yeah, pretty much risk across the board. Markets are breaking down here. Close below this 2,600 level would be significant for me. The next 2 or 3 hours might set up the entire week for volatility. You know, so it's a very important day, Monday here, as we're setting up the week, FOMC week, interest rate policy decision coming out. Definitely going to be a key one for us here. As I'm looking at the S&P, one thing I always like to do is look at the internals, you know, and let's see here.
Give me just a second. I'm going to turn my Slack off.
Is it dinging at you there?
Yes, it is.
Got it. Now, top gainers, Boeing, Apple, Intel, Travelers, Chevron, a lot of large cap company names. On the S&P 500, you have about 360 companies going down, 140 companies going up. The internals are bearish here today. The most likely scenario between now and the end of the day is that we do sell into the weakness. You know, does that mean it's going to happen? We're going to have to wait and see. There's no doubt about it. But that is the most likely scenario. Give me a chart on Johnson & Johnson. We highlighted this one on Friday. More reports came out over the weekend. They are under pressure here on that news. It's going to be interesting to see if this free fall can ever stop on J&J here. You and I, we talked about the news report, and there was just more highlights of it over the weekend. Technically, we're now below the 200.
Yeah.
What's your read on J&J?
I just have this like right here. You see, I put it over there on my watch list. I want to see it kind of calm down and then actually give me some kind of technical read on this.
Mm-hmm.
Right now, with IB being as high as it is, it could be possible to sell some volatility, but I didn't want to sell anything yesterday because something like today could happen where it gapped down again. Mm-hmm. So my thought is this could be a potential buying opportunity or a way to sell volatility, but I want to see something kind of form, some pattern to give me a direction first.
Yeah, I'm looking at some of the losers here. It's not a good sign for the market when the conservative staple type companies are also going down. PG down 2.7% as well. Give me Procter & Gamble up on a chart. Coming off the high, still a very good looking chart. But that's not good. You know, if you're at a Procter & Gamble long, obviously you were looking at that breakout running. It is now down here today. News on PG. They had some CEO analysis come out. Nothing really, though, grabbing me there.
This day doesn't really scare me away for PG. I'd be okay with this.
No, it doesn't scare you away. Obviously, you're concerned about the big red candle and under pressure. There's no doubt about it. AXP is also one down 2.4%.
See, but I also see this big red candle with small volume.
Light volume so far. Yeah.
So what was the next one you said?
AXP.
Oh, what's American Express doing?
American Express coming down into the 200 period moving average. There's some support down here around the 100 zone, but generally under pressure as well. Not the worst chart in the market. We've seen uglier. There's no doubt about it, but that's not a clean chart either. Yeah. Interesting.
Absolutely not.
S&P obviously breaking down, showing weakness, down about 0.7% today. I would be cautious on this intraday move. We're watching it intraday, and it is weakening even as we speak. Go on to the Dow Jones, if you would.
Oh, it's still getting worse. All right, let's go on to Dow. What's Dow look like?
Well, and this is where multiple time frame analysis is so important. When we're training any trader, we have to start with, basic technical analysis. And one of the things that we're going to work on this week in the halftime report is technical charting and different concepts in regards to the technical charting. Tomorrow, I want to talk patterns during Delta Tuesday, the difference between a continuation and a reversal pattern. Today, we're going to look at some intraday and inter time frame analysis, different multiple time frames. The weekly, the daily, and then the intraday is really where you go from. Start with the weekly and work backwards here, Cody, on the Dow.
All right.
Mm-hmm.
So weekly, similar to the S&P, it kind of broke down below its 50-day, or not 50-day, 50-week MA. It looks like it's strong points right here at that 2,400 mark, and it's just below that 2,400 mark. Going down to the daily, get a little bit more detail, but you can definitely see how that 24, I said 2,400 a second ago, 24,000 is really important for the Dow, and it's just not sure if it wants to break it just yet. Clean this up a little bit, actually.
Well, and Coach Matt talks about this all the time. It's the close, not the intraday test. But right now, as is, it looks like it is breaking down below support. Yep. By the way,
yep.
as you come down,
intraday, yep, and you see that same thing hit off of support right there at 24,100, and it's coming down.
It's ugly. It's weak. Guys, if you're out there and you're watching stock prices, obviously you should be hedging or you should be adjusting your delta based on your portfolio design. We're seeing the market. And by the way, it's not a real weak percentage so far. A 0.9% sell-off is not going to get me all worked up. But the charting components, the fact that we broke down, we retested, now we're selling into weakness. That support there at 23.8 is going to be significant. And by the way, on the S&P as well, you've got a very, very similar pattern. Back to the daily charts, if you would.
I just noticed Coach Noah over in the chat. He said, "Put me in. I'll rant about GS."
We can definitely do that, Noah, for sure. Let's see here. Let's go into the Dow components here. Boeing, one of the better performers on the upside today. In fact, up over 1%. Give me BA on a daily chart, if you would.
Let's see, Boeing. Oh, 1% up. Doesn't change what the chart looks like, which is ugly.
Correct. Okay.
What do you want next?
Oh, no, I'm just looking at the news here on Boeing. Boeing to pay $4.2 billion stake for a stake in Embraer JV. They are looking to buy some commercial business. Interesting. Boeing obviously has been a neutral company, up and down, up and down, up and down. I like the fundamentals of the company. It is up 1% today, about the only remaining hope there on the Dow Jones. Apple's actually up 0.5% as well. Now, this is
I looked at that one.
Very bearish chart, but also bouncing off of the bottom here a little bit. Lower low, lower high, lower low, lower high. We're pressing support, trying to hold here.
Yep.
Yeah.
If that thing breaks, it's gonna run again. I mean, let me zoom out a little bit on this. You can kind of see that this is a bearish pattern. I mean, we'll get a 2-day pullback, 2-day pullback, 3-day. Like I'm bearish on Apple right now. A 0.5% day does nothing for me.
I agree. Obviously, 0.5% up is not going to be a great day to the bull side. If it does break support, that could be another trigger here. I'm not seeing a lot of strength here, guys. If you're out there and you're a halftime crew, you know that one of the reasons why we go down to these individual components is it paints a very different picture even than just the index itself. When the only saving grace for the Dow Jones today is Boeing up 1% on some acquisition news and Apple up 0.5% trying to hold support in a downtrend. Obviously very, very weak. The internals are very weak, 25 down, 5 up. A couple other companies like Intel, 3M, and Travelers are up just a hair here. It's going to be an interesting close of the market today.
I was going to try to open my heat map, but it doesn't look like it wants to load.
We'll do the heat map at Tackle Trading here in a minute when we go into the economic calendar. Take a look. We've gone through the S&P, the Dow. Give me the NASDAQ if you would. I have liked the relative adjustment in momentum here recently on the NASDAQ. If you look at it, it is trying to hold support. The other indexes have broken below support, and the NASDAQ is trying to hold. 6,600 was that round number level that everybody was talking about. But what are the bottoms of those candles right there? About 65?
The bottoms of these here looks like the low was 6449, so 6450.
Yeah.
Was about the low here. So, I mean, you'd call it, 6,500 is about where they're all hitting.
Doji today, and if you do get a rally out of the market, maybe, you always want to kind of paint different scenarios in your head as to what might be happening. Could it be that over the weekend we have tested lower as stop losses were taken out, but the institutions are going to run this thing right back up? I doubt it. That's not what the probability paints. But if it was going to happen, it would have to be with technology holding. The NASDAQ here at support is going to be significant. I'm looking at this one internally. There are a few different companies. Applied Materials is actually up 2% today. LRCX, Lam Research up 2%, Microchip up 2%, EA, Alexion up 2-3%. So you have a little bit more mixed in the NASDAQ, but still on the NASDAQ 100, 40 companies advancing, 60 companies declining. Not a great market still, kind of leaning towards the bearish side, but I'm looking at the percentages. It's actually holding up a little bit better than the S&P and the Dow. 0.5% down so far as it's trying to kind of churn and hold support. I know that you've been trading EA recently since it was on the option report. What's your read here on this one?
You can kind of see the lines that I had. I'm seeing a wedge, and it's holding at that $80 mark. I'm looking to see if I can get a trigger in if it breaks and closes below 80. And then I'm gonna play it to the downside. That's my what I'm keeping an eye on for EA.
Mm-hmm. Yeah, I would agree with that. Lower in terms of those highs, but then the lows are kind of compressing in here. Definition of a descending wedge or a descending triangle, no question about it.
Yep.
NASDAQ is going to be an interesting one. Let's do a quick rundown of all the FANG stocks. Give me Facebook if you would, because these are going to be the leadership as we head into the end of the year. Ever so subtly developing a triangle pattern. If it breaks 150 on the upside, that's a reversal signal. You got to respect that. I'm still, very cautious or even slightly bearish on Facebook. I still see the downtrend, the falling 50, but you've got to respect the fact that we've put in a higher low here on Facebook. Interesting. That will be one chart to watch.
Yeah, I got my eyes on this just as a bearish pullback still. So let's see, Amazon.
Now, we had this one on the option report bear list this week. Obviously, breaking below 1,600 was significant on Friday. It's showing more weakness. We're now down probably 2.3%. You've already caught a little bit of that move here. If you didn't catch a good trigger, you may have missed the swing setup, might be looking for different setups. Amazon's got to find some support, whether that's 1,500 or 1,420. We'll wait and see how that shakes out. Not a good looking chart either.
Nope. And not a good looking chart, but the argument could be made that it's forming a slight head and shoulders here, or an inverted. So, it is on. It was probably triggered this morning if you did that, but it was a gap down, so it might have jumped over any triggers that were set.
Mm-hmm. Yep. Let's see here. Move on to Netflix if you would.
Netflix.
Pressure, weakness, descending triangle. Here's the thing about a lot of the patterns in the market, and if you're out there in your halftime crew, welcome, by the way. Got a full crowd here on a Monday morning. It's always good to see you guys. Hashtag halftime crew, and awesome job showing up here and breaking down the markets with us. These patterns lead to indecision, Cody. In fact, that's the definition of the pattern. You're compressing, you're developing a wedge, and they've got to break and run somewhere. Could it be the Federal Reserve meeting on Wednesday? Maybe. I don't think so. I think it's going to be institutional intent and what they want to do heading into the end of the year. Right now, the Bears are winning the day. It's going to be a very significant close to today's session for the entire week, in my opinion. So it is not the kind of day where you want to ignore the market. You got to get in there and you got to develop a plan. And if you're concerned about downside risk, hedge. There are so many different ways to hedge. If you're halftime crew and you have access to the Bear Market Survival Guide course, just type in BMSG. I want to make sure I know who does and who doesn't. That should be a course that you've worked through, learning how to hedge your portfolio, learning how to adjust, learning how to protect in markets like this is significant. There's no doubt about it. Netflix trying to hold up, little green candle here on the bottom, but again, sitting on support in a downtrend. It's been a bad quarter for Netflix as well. I did read that they are ready to dial up a lot of money in 2019 for more original movies and series and all that kind of stuff. They are not afraid to spend money.
That was one of the smartest things I think they started doing was after what I believe House of Cards was their first original series, and they realized that they could produce rather than just showing other people's content.
Yeah.
And the idea of just being able to release an entire show and just binge watch it, like Netflix, that was a very, very smart move of them.
Well, now they're getting into movies. My kids, they went nuts. They love Christmas movies, obviously, this time of year. I guess Kurt Russell's got some Christmas movie that's family friendly on Netflix. And
Yeah, it was a Netflix movie. I didn't watch it yet. My wife watched it. She said it was a good Christmas movie.
well, and here's the interesting thing about it. Kurt Russell, decades in the movie business, his Netflix release was the biggest opening weekend release he's ever had as a leading actor. So think about that. The medium is changing in many regards. Really interesting to watch. Obviously, Netflix sitting down here at the bottom doesn't mean that. And here's the thing about trading: you can like the company and be excited about buying it when it's ready, but you have to wait for your actual technical signal before you do so, right? Trying to speculate upward here without a hedge would be a little bit bold, in my opinion. Obviously, it's got to confirm back up. For me, Netflix would have to break 300 to the upside for it to get bullish again. Right now, sitting at the bottom of the end of that range. And last but not least, on the FANGs, give me Google if you would. Yeah.
Oh, Google's even more messy.
Messy, neutral, underneath the moving averages, sitting on support. For somebody like myself who studied technicals for so many years and just watched charts, as a trader now for 13 years, you go back and historically you look at patterns like this. Most often they'll stabilize and eventually go back up, but it is noisy. Google broke below its MAs 2 months ago, and we have not seen significant higher highs. We're now at the bottom of a chart. This is the kind of company that would have to rally to really bring some strength back into the market. It's not showing strength right now. Little green candle down there on the bottom is showing some tendencies of holding, but nothing confirmed yet. Last but not least on the indexes, give me RTY if you would. Probably, in my opinion, the one with the most potential risk if the market spins out of control. Okay. We're down 1.1% here today, down 16 points. The intraday action has been all over the place, and I'm watching RTY significantly, and it was down. It rallied. Now we are selling aggressively here intraday as the S&P is breaking down, as the markets are breaking down. RTY is also breaking down. Give me a full read here, Cody. Weekly, daily, intraday, and let's get the trend, pattern, and levels on this one.
All right, so trend is definitely we had this low base. Now we're breaking down. Or I guess that would be the trend is down, bearish. The pattern was this low base breakdown. Moving on to the intraday, you can definitely see that where it broke below this 1450 level. 1430 also held, breaking below that. And moving intraday, go to my 13-minute. Came back up quite aggressively. I would say more aggressively than the other ones, but then the sell-off is just matching what the buying came from earlier in the day. Actually, the other ones were bouncing off their 50 coming down. This one got through its 50 up to 200, but still the 200 just rejected it and shot it back down.
Yeah. 1394 intraday low there. Obviously, if it broke below that, you could see further weakness. We're down 1.1%. The RTY is the kind of thing that can either show relative strength or weakness depending on market conditions. I would be cautious here. There's no doubt about it. Even if you're out 1300, 1250, 1200, if you're the type of person who does delta hedge, this is the kind of day where you could, justify a subtle delta hedge. One mistake I've seen Condor's traders make with that, though, Cody, is they end up over hedging. They just take off like all their short contracts and leave long contracts, which was not the design of the original trade. So you got to make sure that you know what you're doing when you're doing those.
That was
investments.
Thursday's show where we talked about that, about hedging Condor properly versus making it a delta-based trade.
Sure. And we did get a lot of good feedback on that show from some of our regular halftime crew. And hopefully you guys on a day-by-day basis, when we get into those segments and when we deep dive into that content, that is helping you build some pretty, important trading skill sets. Hedging is one of them, in my opinion. And the market weak, we're nowhere out of the woods here. In fact, I'm looking more at the internals, and I've got my charts up on my side. It's just a weak market across the board, no question about it. The ARCA high low is one that you use on the newsletter on the weekend here, Cody. Go grab that chart if you would.
Not on a 15-minute. That's a
Yeah,
daily
not on the old
chart.
13-minute chart. Look at that pressure,
Oh man,
significant.
that is definitely significant. Just
The reality is I don't ever like hitting the panic button because we're not in panic mode. Okay. So everybody
we
take
should
a deep
never be in
breath.
panic mode.
That's exactly
Never.
right. If a 1% move on the market into a Monday morning is causing you severe distress, then you probably over leveraged or over hedged. Okay. So try to learn something there. But from a technical perspective and moving our bias, Cody, people that were neutral, hoping support would hold, it better hold here pretty quickly, and it better rally back up below those lows and start showing some strength because it's not looking good. We're down a full percent below that 2,600 mark. Significant to me. This last 3 hours of the market's going to be crazy.
If we close here today, I'm definitely now bearish on the market. I was a neutral to slightly bearish contender, and from yesterday into today, if we close here, I'm bearish on the market now.
Well, you have to have a posture, and that posture can be a yard marker like we talk about in our newsletters and in our shows and whatnot, or it could be a number, like we do when we develop market posture, -3 to +3, or you might just be able to say, hey, I'm bull, bear, or neutral, right? But you have to have a posture. Right now, the market's showing weakness. If somebody's bullish out there, I'd love to hear the argument, because I'm not personally seeing a lot to get excited about. Let's go look at the dollar next and keep breaking down our full Monday prep day. And before the end of our halftime report here today, we're going to look at the calendar. We're going to talk about the Federal Reserve, and what to expect on all that kind of stuff. We've got a meeting here in a couple of days. We'll look at the CME group. And then there's also the GDP number on Friday, which I think is significant as well. The dollar cannot break out yet. It still is in an upward trend, pressing that higher resistance. Give me a read on the dollar here, Cody.
So these three lines I've had on here for about 2 weeks now, and there's no point to change them yet. It's pushing up. It's kind of an ascending wedge, as well as making this channel between 97 and 97.50. Every time it tries to get above that 97.50, it gets pushed back down, but it's staying in this upward trend. We're getting kind of pinched more and more. It's going to break just like the market will. It's either going to break to the upside or break to the downside. A little bit of indecision right now, but once we get that confirmation, we'll trade it whichever way it goes.
Fed, I want you to go and open up a tool. In fact, I'm going to give you the link directly. Okay. The CME Group, Chicago Mercantile Exchange, in the futures market, they have what are called Fed funds futures. And by pricing out Fed funds futures, they can anticipate what the likelihood is of a rate hike or a rate drop, anything that's going on with the Fed. They have a tool called the CME Rate or Fed Watch tool. And I'm looking at this right now for the 19th of December, 2018. The expectation is they're going to raise 25 basis points. Now, for the first time in a long time, there's a 20% bet that's saying that they may wait another round here, and it's very possible. The market has come off of that a little bit. Maybe they will raise. I mean, that's the expectation. 78% of traders are saying that they will raise this quarter and in this meeting here this week.
Oh, yeah. So I kind of talked about this when I did the scouting report this weekend, and one of the things is, so the reason we're having this 20% of people saying they're not going to raise is because of the volatility that we've had in the market. But the Fed has basically given remarks saying volatility, no volatility, the economy is strong. All the other indicators are showing that a raise should still happen. So just because volatility is now being added, they're not going to come off their position of raising rates in a strong economy. The market and the economy, and you, Matt, have talked about this a lot, they're connected but not the exact same. And with the market having volatility doesn't mean the economy is bad. So the Fed is raising rates based on this strong economy, and this bet here is because of the volatility in the market. I'm still leaning towards the more likely of they're going to raise that quarter point as intended.
Rising interest rates generally is good for currency in that economy, so the dollar could break on that news. It's going to be an interesting week this week. because we've had other times where the Fed has raised in the last couple of years where like 99% of the traders in the market say, hey, yeah, we know they're going to raise the rates, right? So even that 20% right there, that is at least enough people to add some volatility into this event. Wednesday is going to be a key day. If you scroll up here, Cody, what's really cool about this tool, there's some interesting stuff as you go to like January and March and May. Click on June. See, the market by next year, middle of next year, everybody in the market who's trading and investing, well, I shouldn't say everybody. There's 10% of people who think we'll be at the same 200 to 225 basis points. Most people expect interest rates to continue to rise in this environment. That could continue to put pressure on the yield curve as well. Wednesday is key. FedWatch tool is pretty cool, actually. I like it.
This is definitely cool. I'll throw this in the chat for the YouTube guys.
Yeah. All right. As we move through the week, the currency markets are going to be one of the more volatile markets. I was looking at the calendar here this week. Go to Forex Factory if you would, Cody. Let's do a breakdown of the currency reports coming out.
All righty. This is what we have going on in the U.S. I typically just look at the red and the orange. Maybe every once in a while I'll throw up some yellow folders, but Wednesday being the biggest day that you're going to see. I mean, we have the housing stats coming out tomorrow, but to be honest, most people are going to ignore that because they're anticipating the Fed meeting.
Fed meeting on Wednesday is key. The GDP on Friday is key.
But that's the final GDP, though. So we've already had the preliminary and the first two. So
sure. I always teach it like this, though. Anything to do with jobs, the Federal Reserve, or the GDP is something I'm always going to pay attention to. Now, the other things that go into affecting those decisions, like inflation, housing starts, retail sales, obviously anything red is something you look at. Yeah, you're right, though. I mean, final GDP number may not have a dent, but I will be paying attention to it, no doubt about it. Let's take a look at the red impacts on all the other currencies. There were a couple other key events here. In Japan, they've got a monetary policy statement on Wednesday night. The BOJ policy rate decision will be coming out of Japan. Anything to do with the dollar-yen cross pairs should be paid attention to. And then out of Britain, you have another policy statement here on Thursday morning before the market opens. Currency markets might lead the volatility. And by the way, that might be forcing some of the action in the stock market here. There's always that inter-market relationship that can happen. A lot of key events later in the week. Early in the week, it looks like we are really driving on technicals, and that breakdown in the market. Anything else stand out to you there, Cody?
Two things that stand out to me, just as a Forex trader, is the New Zealand GDP and the Canadian GDP. So similar to ours, I want to make sure that I watch these if I have trades on those currencies.
Yeah, I would agree with that. Let's break down all the commodity markets. On Mondays here, guys, in the halftime report, we do a thorough analysis of what's going on across the broad markets. Currently, as we speak, stock markets are down about 1% underneath major support that has been holding now for a couple of months. And could be a breakdown, could be the start of a breakdown. We'll see how it ends up closing here today. Crude oil is now also testing the level that we've identified as significant, and that's the $50 mark for the crude, light sweet crude price. We're at 50.61 here, descending triangle pattern. Give me a read on that, Cody.
That is the read, descending triangle, pushing right into that 50. If it breaks the 50, then it's going to continue its bearish momentum, and it could actually go with a little bit faster momentum than when it broke its 200.
The headlines are always funny. Oil down on weak growth fears, thin holiday volume. Okay, tell us something we don't know. No real fundamental reason.
It's like, this past week. So every time I've checked the news, I see the words like oil rallies off of this, and I'll look at it. It's like this candle here, and it's like, what do you guys look like? Don't keep using that word. I don't think it means things. So, oil down. If it breaks 50, I mean, you zoom out, don't even see the next support level in this year. You have to go out further.
Yeah.
3 years. If it breaks 50, you see it going to 45 and pausing. You think you see it going past 45 pretty quickly.
I think if you break 50, you're probably looking at a 40 handle at some point over the next few months. Obviously volatility on breakdowns, the breakdown retest always, is a good pattern to be watching for. That weekly chart shows you the weakness. You had a significant sell off through the late September through early and mid November. We tried to hold on here the last few weeks, but 50 is holding on by a thread. Down here at 50, 58 here today, volatility. What's interesting, the dollar down, you'd expect commodities to kind of bounce a little bit, and they have not done that. That inverse relationship is not playing out on a day-by-day basis. Natural gas down 7%. It really has kind of unwound here. I was very bullish on natural gas when it was breaking out and running. Even in our meeting here on Thursday, Cody, we basically said we have to go neutral on this thing because of the crazy run up and the crazy sell off. I guess it's warm outside. Is that right? Hold on, let me check.
I mean, it's got to be a little bit, but with that kind of drop, man, I guess people just shut their heaters off.
Well, yeah, maybe. What's really happening here, quite frankly, is you have institutions driving this price in ways that it's hard to wrap our head around. I don't know a trader who knows that they could make an argument for the fundamentals one way or the other for natural gas right now. You're trading the price action, and currently the price action is very, very bearish in the last couple of weeks. After it broke below 4, we saw that as a significant break. It did sell on Friday. It's selling here today. Where this bottom is will be very, very interesting. In the big picture on the weekly chart, though, the breakout was the significance. If you think about it, you're looking at it. The breakout in October and November from a big picture perspective, now that sell-off is coming into old resistance points. Over the next few weeks, I'll be really watching natural gas to see, how it interacts at these levels.
Absolutely. I mean, there's a reason it's called the Widowmaker.
C'est la vie. I agree with that. One of the better looking charts in the market today is gold. Cody, We talked about this. We talked about the old resistance, new support. Friday was a good day holding. Today is a great day. If you're not in gold right now, we would be looking for a new trigger above that 12. And I was trying to debate this resistance. Now, is it the 200 period moving average, or is it the top of the body of that candle? That entire zone's probably up at 1260. Where do you got resistance?
Resistance, I'd probably put it, about 1260. And I remember we talked about this on the scouting report that I was saying this could be a possible entry, and we were hoping maybe we'd get 2 more days down. I remember drawing these 2 candles for these 4 candles. Or was that the halftime we discussed it? If it can continue this and actually get past 1260, then I would become extremely bullish on gold.
Now, here's the thing. I want to get the halftime crew's opinion on this one. Gold right now for you personally, there are no wrong answers. Bull, bear, or neutral? Are you bullish? Are you bearish? Or are you waiting for something else? Some kind of signal, some kind of setup, something else. Bull, bear, neutral on gold. Let's get a little poll going here, impromptu style in the chat on gold. I like gold. I've been bullish. I like the pullback. I like the pivot. If it broke out, I'd even like it more. You would have a lot of clear air if you can clear that 200 period moving average, So keep an eye on the metals market. We've got some answers coming in here. Justin, bull.
Bullish, neutral. Neutral if it breaks 1260, then I'm bullish. I agree with that. Slightly bullish, 0.
I respect all these, opinions. If you're neutral waiting for something, I can understand that. If you're bullish because of the developing trend, I can understand that as well. Interesting product, obviously one that we've been talking about each and every day. Silver up 0.8%, not breaking out yet. 1480 or 15, depending on where you draw that level, are the significant ones. For me, it's always been 15.
It's 15. I mean, silver's just the child that doesn't want to put his shoes on before you got to go. Gold's already out the door, and silver just doesn't want to play. I mean, I see the 1475 just off of the technical side of it, but 15 is where I'm at, of needing it to close above 15 before I become bullish on silver. Otherwise, I'm neutral.
Yeah. If gold does break, it should lead silver higher. It's playing a little bit of little brother, big brother here. Gold is leading the way. Silver's coming right back from behind. Gold breakout should be a silver breakout as well. It's going to be an interesting one to watch on that. Definitely a correlation in the metals market. Those are the broad markets here on a Monday, guys. In the halftime report, we always break down the sectors as well. To do that, actually, Cody, why don't we go to Tackle Trading and use the site? Let's get on Trade Center if we can.
Let's do that.
If you're new to our halftime report, or if you've never attended this event, every Monday night we do an onboarding where Coach Frank from Tackle Trading, he actually walks the new people through how to use the website and the tools, right? And that would be tonight in the onboarding session. It's in our shows. You'll see that in the calendar as well. That's the next one coming out. In the market skyline is where I do a lot of my, overall big picture analysis. And I want to take a look at this one here. First thing, the heat map. Now, the old saying, a picture is worth 1,000 words, is the reason why people love heat maps. Once this one kind of populates here.
There it is.
What do you pick up on?
I see a Christmas mixture of green and red. It's the difference. It is a fight between the bears and the bulls. Some people see this as a, buy the dip. Maybe it's going to come back. You have the bears saying, hey, this is a technical break to the downside. The market's not sure what it wants to do. You can see the mixture in there.
I agree. And obviously it's individual company names. Amazon stands out. Big red box, boom. It shows you that some of that pressure is coming from major names. Johnson & Johnson stands out. But then I also see a lot of muted responses. Google and Facebook near break even. Chevron up, Exxon down. The utility sector selling off, which is really interesting. That's kind of a rotation out of safety, down 2-3% here. Obviously, utilities down fairly healthy. And with rising interest rates, dividend yield kind of companies or other products tend to go out of favor a little bit. The banks are mixed. The heat map is giving me a mixed picture. Definitely has given me a mixed picture. There's complexity in the intraday or internals of the market there. Come on down here if you would, Cody. Let's go to the sectors section next. Now, by the way, on the market skyline, if you just bookmark that page, you can get a lot of great information. Just boom, 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 step by step. Real estate down. In fact, every sector.
Yeah, this is the page I use to build the halftime prep notes. Is this right here? I go here and I start building the halftime prep notes.
Let's do this. We're going to do a thorough breakdown of all these different sectors. What I'm going to do here, Cody, you can actually look up like the top holdings for each one. Okay. Let's look at the charts here. You can give them a quick glance. Actually, go back to Thinkorswim. Let's get a full chart on everything. And we'll go through it component by component, okay?
Sounds good to me.
Start with XLK. I always do start with tech when I'm doing my sector analysis.
Neutral bearish, pushing down. Not sure if it wants to break below that 64 mark. That's my read on that. It's more, it is bearish, but it's got some neutrality to it. You can kind of get that feel.
Yeah, definitely. I'm looking at this. One stock that we didn't look at earlier was Microsoft, which is the largest weighted company in XLK. As Apple has shown weakness and Microsoft has held up fairly well, it now has become the biggest company in the world. If you are looking for something that might be at least tradable to the upside on some kind of confirmation, we are sitting on support, but that's a neutral chart at best, right? That's Absolutely. Not a bullish chart. Long term, the weekly is looking good. Kudos to Microsoft for holding the 200 period moving average. One of the only companies in that space that has done that. Okay.
The battle between Microsoft and Apple, it will always continue.
So tech is relatively weak. Let's take a look at the discretionaries, XLY.
Move that out of my way. There we go.
Below the moving averages, weaker than tech and breaking below or even at least testing some major support here. What is your What is your exact level on support there, young man?
Well, I have this one sitting at 101 or 193 cents. 100 is the major, the more important, just because it's that round number. But before it even gets close to that 100, it's been pulling back, except for today when it's kind of pushing right into that. That's probably the most significant one.
Yeah. Well, you know what's really fascinating about the current market we're in and this one? This is one of the worst Decembers on record to start the month for the first 2 weeks in like 30 years. I read something on,
I think it was like 38 years or something like that.
Yeah. It's obviously, I mean, the market has become accustomed to the Christmas rally. And if there's any sector that should rally on a Christmas rally, you would think it would be consumer discretionary. Top 10 holdings on consumer discretionary: Amazon, Home Depot, McDonald's, Nike, Booking.com, which is the old Priceline.com, Starbucks, Lowe's, TJ Maxx, General Motors, Target. These aren't
some of those real quick.
Yeah,
Home
give
Depot
me a
down, Target down. Wow, that's a break. Lowe's. God, these don't look pretty.
No, discretionaries definitely have weakness across the board. If the best case you could make is that Amazon is still holding some support within 100 points, man, you've got a real soft argument here for consumer discretionaries. And I mean, you know, I'm looking at Target. Target is one of our Tackle 25 stocks. I love this company from a company standpoint, but that's a major break below support. You know, Coach Frank, good eye on that. You know, and that was on the option report, I believe, this weekend as well. There's a major break and trigger showing you some of the weakness here across.
Yeah, look at that level going all the way back 3 years, and it's breaking it right now. That is a major break.
Yep. So tech pressing support, trying to hold. Best case scenario is your Microsofts and whatnot can find some support. Discretionary is definitely pressing or breaking support across some of the major ones. Amazon will lead the way on those discretionary stocks. Newer sectors, XLC. And we're talking, you know, your Facebooks and all your communication type stocks, Google. This is an interesting one because you have a triple bottom developing in a lower triangle wedge. That is a continuation pattern. If you break below support, you need confirmation. Holdings on this one, we've been fairly bearish on this one. Facebook, Google, Verizon, Disney, Comcast, AT&T, Twitter type companies. Take a look at Twitter real quick. That was one of our bullish candidates if it broke. And little breakout, pullback, developing something in here. So you are seeing some reversal type behavior in some of these companies. Facebook was that same way. We looked at it earlier. Google holding that support resistance channel kind of neutral until it breaks one way or the other. This is an interesting sector for me because it had been more bearish for a long time, starting to show some reversal tendencies in some of those communication stocks. Might be one to watch for sure.
Some of these I'm not sure how they're communication companies, but I digress.
XLI, let's break down the industrials, if you would.
All right.
Oh, that is one of the more bearish charts in the market right there, you know, and
yes,
just a firm breakdown. That's a problem for international growth. That's a problem for emerging markets. That's a problem for stocks in general, by the way. Rapid fire through some of the top holdings here in industrials. We've already looked at Boeing. Just give me a Boeing chart real quick. And you guys tell me what you see. Kind of sitting in a range long term, but below the moving averages. 3M, MMM, second top holding.
MMM. Oh, 3M. Not 2. Neutral, not as bad.
Ooh, I don't. You break support there. That's a
break that.
Head and shoulders continuation into that primary downtrend. That's ugly. Union Pacific, which I liked for a couple of weeks there when it was starting to show they wanted to go back up, but it did not do that. Completely
broke that 200 and just kept going. Yep.
The railroads are just ugly right now. Honeywell. not a good looking sector. Industrials are showing me a ton of weakness here, across the board. One of the top, how is GE still a top weighted company in this sector? Give me GE, 3% of the index weight. Oh,
Oh,
my,
geez,
my.
up. Oh my God, 0.05%.
Oh, yeah, say la vie. They had a big thing in the Wall Street Journal. Actually, one of my students, one of our loyal halftime crew, sent me a wonderful text. And Bob, thank you for that, by the way. Good heads up on GE. He said, Tim, you got to check out this article in the journal. Apparently, it's now becoming pretty apparent. I have a rant against GE because everybody's reminding me of it all the time now. Do I bring it up like every day, Cody? Is that
You're quite frequently,
pretty consistent?
yeah, you'll hit GE. I mean, you just take the opportunity to hit GE like Matt takes the opportunity to hit JP Morgan.
It is an easy punching bag. There's no doubt about it. And by the way, that should be trading. You should always trade what's obvious. When things are breaking down a week, trade them weak. There's a great lesson in GE here. Now, GE has fundamental problems, but don't assume that just because you like a company that it's going to go back up for whatever reason. If the market wants to bring prices lower, it can bring anything lower, including our darlings, including our Apples and our Googles and everything else. Guys, we've been breaking the market components down step by step here today, and there's not a lot to hang your hat on right now. I know that the market might test back up into that support, but we're breaking, and most of these sectors are looking fairly weak for me.
Yeah, there's still a zero. Zero is still possible.
Well, there's a long path between now and zero, young man. Move on to energy and materials, XLE, if you would. Energy is going to go the way of crude, obviously down 0.77%. Very, very bearish here. Some of the top holdings are actually holding this up a little bit better than you'd think. Exxon and Chevron have not broken. That's everything in the energy sector, by the way. ExxonMobil, 25% of the sector. That's how big the company is. Breaking some support here today. Chevron, CVX, 18% of the sector. Holding support today. So you've got some mixed information in energy, and really that 50 handle on crude oil is going to drive that price of energy. A lot of these other weightings, they're still big companies, but they're nowhere in comparison to Chevron and Exxon. Conoco, EOG, Occidental, Marathon, Schlumberger, so on and so forth. They're all about 3% weighting the sector, where Chevron and Exxon make up 45% of that sector, So that's pretty incredible when you think of that size. Energy showing weakness. Materials, let's go on to that one next, if you would.
Let's see, basic materials. Is there going to be a chart that has a sector that has a green candle?
No, not today, young man. Not unless the market turns around for us here. Dow DuPont, 18%, also a Dow 30 component, DWDP. Land, Echo Lab, Sherwin-Williams, Air Products. You look at DWDP and it kind of shows you that XLB pattern. I mean, they're almost identical. You do have some support coming up here, which could be in play. Generally, some weakness across the board. Move on. Let's see. We've gone through. Let's do healthcare next, if you would. So
you're just making me jump all over these sectors.
Well, I'm actually thinking through it from an aggressive defensive standpoint. Out of the 10, I think we have 11 XL sectors in there. I would put about 6 of them in the aggressive, area of the market. Then when markets are bullish, they perform very, very well. And then 5 of them are probably in the more defensive area of the market, different components in them. Healthcare, staples, utilities, financials, and real estate would be those defensive names. XLV holding the 200, but some major support in play here. What's your read, young man?
If that 200 breaks, look out below.
Correct. I mean, we've seen the rest of the market, and a lot of that is Johnson & Johnson weakness. This sector was doing fine until that J&J news. 10% of the sector, and that stock is down heavily the last 2 trading days. Pfizer breaking down, UNH coming down. Actually, UNH looks exactly like that pattern right there. A lot of weakness across the board in healthcare, and some of the biotech names are going to be in play to the downside as well. I'm trying to find a good case for this market, Cody. We are having a hard time with that today for the bull side, which is why you got to trade what you see. We are range down. Maybe there's some support bounces in play. There's always bull bear candidates. There's no doubt. Move on to staples, if you would.
Staples.
Where did we have this one rated on the weekend scoreboard here and newsletter?
Let's go take a look. Staples, we have XLP, right? Dead set neutral. 50-yard line.
Yeah. We were neutral. There's a reason we were neutral. They should hold up in a market like this. And by the way, go back to that newsletter for a minute. If you guys are reviewing the weekly newsletter each and every week, just type in the word newsletter in the chat. Let me know. I would start with that before you ever go into the individual reports on what trades are here, there, and the other thing. That's top-down analysis 101, right?
And I would always advocate for listening to Cody's opinion before anyone else's.
That's right. As I look here in the chat, there's also a few comments and if I missed anything, Coach Frank or Coach Noah, let me know, or you guys answer them as best as you can. Moose Lady, perhaps Santa thinks consumers have been naughty. Yeah, we're on the naughty list.
Wow.
Cosila, I am looking to add the purple arc you're showing in your chart, but cannot add it. May I have the exact name? That's called a probability. Yep. Probability expiring cone. Got it. All right. Got a few more sectors I want to run through. Staples are more neutral, trying to hold the 200. Go back into think or swim here. Give me real estate next.
Man, real estate was the only one that possible bull from that bull retracement today. It just said no and just got absolutely hammered.
Yeah.
So we had a bullish posture on this one because of that. On real estate, we actually became more bullish on it, but one day changed that posture for me.
Well, I mean, a lot of these are going to be REITs, real estate investment trusts. They're not all home builders or anything like that. In fact, as I look through the XLRE sector, a lot of them are REITs: American Tower, Simon Property, Crown Castle, Prologis, and potentially the old REIT market. If they think Fed's going to raise interest rates, it is an inverse relationship. One thing that happens across markets is that when something fundamental is happening, and right now the idea is the Fed's going to pop rates up, well, that is going to take away money from other interest-bearing type products. XLRE and utilities could both be a candidate for that. Take a quick look at the top three here, Cody. AMT, American Tower. Yeah, coming off the top here. Slowing momentum, change in trend. Let's see here. SPG. There's your weakness.
Oh, yeah.
Yeah, Simon Property down 3.5%. Obviously, that's one of the reasons why XLRE is down big. Yeah, and it's an 8% holding in that sector. Move on to utilities, if you would.
Man, utilities. We had a bullish posture on utilities as well. And
yeah, down 2% here today. I mean, the best explanation that I could come up with as to why those two sectors are down is just what I just said. Rising interest rate environment, take money out of other interest-bearing products. A lot of people buy the utilities sector for their dividend, that guaranteed return. And when other interest rate products are going up, they can do that in the bond market. They can get it from other products. There's an inverse relationship in some regards there. XLU is down, coming back, but it's still a bullish trend there. That's an interesting one, still holding. If there's any sector in the market, you could still lean on the bull side. It may be utilities once it settles into the old support or old resistance here.
Yeah. I want to see it come back in here, get a small candle, and then definitely continue that bullish posture.
And last but not least is financials, if you would.
Oh, financials. Oh, we do have a green candle on a sector today. It's still down, but it's a green candle. We found it.
The financial sector has been one of the weaker ones. Brokers have been weak. Regional banks have been weak. National banks have been weak. One of the only things that have been holding up have been some of the insurance companies, but not all of them either. Berkshire kind of had some, relative strength there for a bit. But in general, financials are just showing weakness right now. That's a break below support. You saw it with Goldman Sachs. You saw it with a lot of the major names in financials. Top holdings in this sector to kind of be aware of as to what drives this sector. Let's see here. Looking at the spider.
What do you got for me?
C'est la vie, kiddo. Berkshire's number one. Type in BRK/B. 13% of the sector.
Oh, Warren Buff.
Testing support here. It was showing some strength about 2 months ago relative to the market. It wanted to run. It then broke down. Now we're testing major support on the sector. JP Morgan.
Where's Matt when you need him?
I saw a report from Jamie Dimon. Here's the thing about markets, guys, and it was a cutthroat statement. Jamie Dimon came out and said, God, you know what? I'm not real worried about a recession because we're probably going to make a lot of money in a recession.
Oh.
Now, the American people don't like hearing that.
No, they don't.
Their jobs. But that's what Wall Street sharks are, guys. They don't care if the market crashes because they know how to handle it, right? JP Morgan, obviously weak here from a chart perspective, coming up into earnings here middle of next month. We'll be talking more about earnings season as we go. There were a few companies that did have earnings this week as well, Cody.
Yeah.
Just
earnings kind of getting started.
Oracle, FedEx, General Mills, Rite Aid, BlackBerry, Nike. The big one will be Nike and FedEx this week, I'm sure. FedEx tomorrow and Nike.
FedEx first then.
Let's put this in the prep tomorrow. FDX.
FDX. There it is right there. Guess people aren't shipping this holiday season.
No. Not quite. Nike as well. Good. And one last intraday read on the ES.
All right, let me find my indices, watch list, ES, and intraday. It's below that level.
You just broke intraday support on a day where you tested down, bear retrace, kiss goodbye, selling off. Since the kiss goodbye, when we started kind of doing some halftime prep here about an hour ago or so, an hour and a half ago when we started talking, Cody, the market is down 40 points, nearly 40 points since that kiss goodbye. 1.5% selling into the weakness here. Guys, it is not, we just broke down the entire market as we're talking here. Markets have caution to say the least. Make sure you're getting in there and you are hedging, adjusting, trading with confidence and within your system. Here at Tackle Trading, we'll help you interpret what's going on. You got to be out there doing your thing, guys, and get trained on how to, make decisions confidently about what's going on in the market. Aye, kiddo. We got work to do in front of us, obviously.
Yes, we do.
Not a week to take the week off, guys. Christian, it might be your fault. I'm going to have to – I'll check.
It's always Christian's fault.
That's right. All right. Couple things. Number one, onboarding tonight, coaches shows, and traders lounges throughout the week. If you are a pro member, get in there this week before the holidays get kicked up and going, and make sure you're building the skill sets so that you can handle the market volatility like this that we're seeing here. Really this entire quarter, Cody. Since we started October, the markets have been selling. The weakness today is not surprising. Any last words, young man?
Keep an eye on the market. Hedge that portfolio. Protect yourself. Take the stress out of things and think smart.
I loved your something fun in the prep today.
Oh, yeah, the Wright brothers.
This was on this day, 1903, Orville and Wilbur Wright made the first successful flight in history. Now, have you ever read the book Start With Why?
I have, yep.
Simon Sinek does a wonderful job describing how that story is so, really inspirational. And I'm sure it's always been that way. I love the analogies he used at the time. And Simon actually details this in the book as well. There was a competing group of people that had government funding, more money, better scientists, supposedly, that were also trying to take flight. And the Wright brothers beat it to them, just
that passion.
drive. Yeah. Very cool. All right, guys, we are done with the halftime report here today on a Monday, 12/17/2018. If you're watching and if you got some enjoyment out of this or, some training, some education, make sure you share and click the like button and come and join us over on tackletrading.com for all of the content we put out. Cody, we'll see you tomorrow, young man.
All right. We're out.